Michael Saylor and MicroStrategy just posted one of the greatest earnings beats in the history of Wall Street, beating expectations by 46,000%. And the price of the stock
is down?
Yet, Microsoft and Meta post good earnings with some potential accounting shenanigans and they're printing moonshots. Something's not adding up. Results like these make you question whether we have actual free markets or the markets are being manipulated. We're going to dive in. This is Dante Cook with Bitcoin Simply. Let's go.
So far, we've launched 4 listed preferred equity offerings, STRF, STRK, STRD, and STRC, with STRC representing the largest IPO in the US so far this year. And finally, we raised an impressive $18.3 billion in capital year to date, which already accounts for 81% of the total capital we raised in all of last year combined. And we accomplished that in just 7 months. So in addition to expanding the depth of Bitcoin-backed credit instruments to the market, we are raising capital more quickly and more efficiently than we have ever before. Now moving on to our EPS results. Q2 25 stands out as a transformational quarter for strategy, driven by 2 major factors: the substantial appreciation in Bitcoin price between the end of Q1 and Q2, in conjunction with the adoption of FASB's fair value accounting rule at the beginning of this year. We achieved a record $14 billion in GAAP operating income and $10 billion in net income, reflecting a fully diluted EPS of $32.60 per share for the quarter, the highest in the company's history and what may be among the highest of all S&P 500 companies this quarter. Our results for the first half reflect $8.1 billion in GAAP operating income, $5.7 billion in net income, and an EPS of $19.43 per share, also a record high for the company.
Okay, these numbers are absolutely silly. MicroStrategy had the largest IPO of the year in STRC. They've raised $18 billion in capital, have a $112 billion market cap. They're projected to have the 13th largest net income, despite being the 96th largest company by market cap in the S&P 500. And they own 3% of the scarcest asset in the world. What's not to like? Apparently a lot. As I'm writing this, pre-market, the shares are down 6%, but will probably be down or flat on the day, on news that's actually pretty good. I mean, they did just post a net income of $14 billion and an earnings beat of 46,000%, $32 a share. How is this possible? And you look at companies like Meta and Microsoft, which are up 11% and 4% respectively from their earnings, which were good. And there's potential accounting shenanigans here because their CapEx increased by $60 billion, yet their depreciable assets barely increased at all. They're saying that their GPUs have a useful life of 10, 11 years. But in actuality, we all know that they're 2 to 3 years. That's another thing I'm going to invest at another time, but that's not the point of this show. I'm not a MicroStrategy shareholder, so I have no skin in the game here. It's kind of crazy that a company just posted one of the best quarters in the history of Wall Street, and they're not being rewarded. One of the reasons they might not be rewarded is because people are fearful of all of the fundraising, all the dilution that happens when they issue common equity at the market, and they dilute their existing shareholders. Sure. But even in this earnings call, they posted guidance that they would not dilute their shareholders when their MNAV is less than 2.5. They laid out a plan, a strategic plan for when and how they would buy, making their common stock more scarce. The whole reason I want to bring this sort of thing up is because there's this camp out there that says if you post great earnings, if you execute on a strategy, which Michael Saylor's been talking about this for years now ad nauseum, and now they finally come to reap the benefits of this strategy and they're not being rewarded. Markets are increasingly manipulated these days. I mean, there's companies out there like Novo Nordisk, safe investment, right? Down 67%. What about United Healthcare, plunging to its lowest levels in 5 years? It's a healthcare stock, right? That's pretty safe. Sick, unhealthy people, decimated. What about 20% of your holdings in copper being wiped away overnight? Retail investors now make up 20% of the options market, and margin debt rose 9.5% in the month to hit $1 trillion. According to the Shiller-Cape ratio, a fancy index, we're at the 3rd highest valuations for the S&P 500 of all time. The percent of companies with an enterprise value to sales greater than 10 is at its highest levels ever, greater than the dot-com bubble. Foreign investors own 18% of US stocks. And the reason why people are YOLOing into markets these days is because that's the only way that they can get out of this affordability trap. I mean, Beef on average is $6 a pound in the United States. When looking at these charts, the only affordable diet here is a diet of alcohol and cheese. Everyone knows something is wrong and they're acting like everything is fine. Check out this amazing ad from Coinbase. It depicts what's going on to the middle class around the world in perfect and hilarious detail.
We ain't got no troubles, no reason to complain. 'Cause here in great old Britain, we just love it when it rains.
Morning.
We're cozy here at home, even though it's not our own. But wait a few more years and who can say? Everything is just fine. Everything is grand. Your life can get no better when you're living by the letter in this pleasant land. Everything is just fine. Everything is great. The streets can't get no cleaner, nor the rat meat any leaner. No, life is just first rate.
Everything is just fine.
These fish fingers are a steal.
Prices up a smidge.
Just £100 a meal.
Empty purse, but hey, could be worse if there was nothing in the fridge.
Strategic realignment means I get to work for myself. Yeah!
Paying off my law degree with tips from each delivery. Excuse me, sir, I have your tandoori. Everything is just fine. Everything is grand. Your life can get no better when you're living by the letter in this pleasant land. Everything is just fine. Everything is great. We're soldiering on. We're doing our best.
We're off to Dubai.
It's time to jump ship.
We're tightening our belts with a stiff upper lip. 'Cause everything's just fine.
Why are markets manipulated? It's because people have to YOLO in order to afford the ability to live a normal and middle class life.
Say you've got quite a good job in a London bank and you decide you're going to buy a 3-bedroom house in Fulham, which is probably 1.4, 1.6 million. In 2024, you're prepared to spend about 50% of your discretionary disposable income in order to own something that a poor person would have owned in 1924. The house itself is a piece of shit, right? It's not an interesting house. It's the location that contains the value. The house is unbelievably boring. It's where a postman would have lived, in 1917. You have this extraordinary competitive technological economy where you can buy jet skis and hot tubs and everything else, right? No. I don't want any of those wonders. Now, the postman in 1917 would have been aghast at what we can buy with our money, the cars, the holidays, the jet travel, etc. As I said, if Louis XIV visited that house in Fulham, he'd go, you've got the flat screen television, you've got broadband access, you've got a car outside. You truly are possessed of unimaginable wealth. What I can't understand is why you live in such a shit house. And so we've produced these extraordinary consumer goods, and yet the vast proportion of people's disposable income is spent in buying a location occupied by a totally house.
You work hard, save, get a great job in a downtown urban environment as a financial advisor, and spend 50% of your money on a crappy house. The answer is pretty simple. It's the manipulation of the money overall. I mean, we have the Treasury Secretary of the United States of America calling the Fed to lower rates and enact a Greenspan type of policy, which got us into this mess in the first place, on national television.
If I were the Fed, I would try to think a little about the 1990s Greenspan model, where you saw the productivity kick in from the previous decades adoption cycle in office technology, in electronic technology. I think there's a good chance we could see a replay of the 1990s. And it's going to take a little bit of imagination, same way Alan Greenspan had.
Yeah, there's going to be a boom in CapEx. Yeah, you're going to be able to write off factory and manufacturing starts. Yeah, there's going to be a boom in AI and infrastructure. But what is it going to cost? Is anybody looking at what are the effects and outcomes of the manipulation of money? It feels good in the short term, but hurts us as a society in the long run. Let's take a quick break to thank our sponsors. One of the ways that you can exit the rat race and by not selling the best assets in the world is by not selling your Bitcoin. One of the best ways you can unlock liquidity in your Bitcoin without selling your Bitcoin or borrowing against your Bitcoin is by working with the leader in Bitcoin-backed loans, which is Ledn. Since 2018, they've issued almost $10 billion worth of loans to tens of thousands of customers around the globe. Money's in your account in less than 24 hours, and the application takes just 2 minutes. Go to learn.ledn.io/simply to see how you can get started with rates as low as 12.4% or 0.25% off if you go to learn.ledn.io/simply. One of the ways that you can continue to get out of the system and exit the system is by removing your Bitcoin from exchanges like Coinbase, who did just drop a fire ad. Nonetheless, Coinbase isn't a place that is going to protect your generational wealth the right way. You need to do that on your own and become a sovereign individual. And one of the best ways you can do that is by working with a coach at thebitcoinway.com. Their team will walk you through self-custody step by step, properly, safely, securely, so that you can confidently protect your generational wealth the right way. Schedule a free 30-minute consultation with their team at thebitcoinway.com/simplybitcoin. Let's get back to the show. If you want to keep playing the fiat game, keep playing. Things appear to be getting worse and worse, and only to be working out for people who are boomers and already have the assets. Or you can play a new game, a game where the ultra rich or the boomers or the people who had lower interest rates don't have an advantage over you. And that game is Bitcoin, the next frontier, digital assets. Assets that you can purchase with a dollar cost average at any exchange in the world are removed to self-custody and become a property owner whose rights won't be diluted because the code says that there are only going to be 21 million Bitcoin. And there's no excuses to not be getting into Bitcoin or learning about Bitcoin because the United States government says that they're going to be stacking soon. Do you want to front run the government?
What's the update on a potential Bitcoin strategic reserve?
Well, look, we have it. It's been established through executive order in the SPR. We also have the strategic national stockpile. The digital assets national stockpile. I think that one, we wanted to recognize Bitcoin for being unique, and we talk about what that looks like and kind of the threshold that Bitcoin has created. It's in a class of its own, and everyone recognizes that. But we also wanted to give credence to the work and the development that's happening across other ecosystems, and that's why we have this national stockpile alongside. This actually requires some labor to get this set up properly. You have to build the infrastructure. You have to make sure that you're crossing your T's and dotting your I's to get this done the right way and have long-term success with it. But I've said ad nauseum, we do believe in accumulation, obviously in budget-neutral ways, as the president's outlined. But there are countless ways that we can engage in that. We'll act on those that can be most expeditiously implemented. And I think that, people will be very pleased with the direction that we go in.
There's less than 1.1 million Bitcoin left to be mined. And folks like Saylor are raising $4.2 billion more to buy more Bitcoin. There's not going to be enough left when you really want to get it. So my suggestion is start today. This train isn't stopping. Either you get on or you don't. The choice is yours. Hey, super excited about meeting you all in person from November 11th through November 13th in Dallas, Texas at the largest Bitcoin mining expo in the world at the Mining Disrupt Conference. Get 20% off your tickets by using the promo code SimplyBitcoin at checkout. Again, the Mining Disrupt Conference is going to be awesome. The Simply team's going to be there, and we hope to meet you. I hope this episode was enlightening, and hopefully it shows you that markets are more manipulated than you think. The least manipulated asset in the world is Bitcoin, and one that you still have a chance to get in on. Don't waste your opportunity. This is Dante Cook with Bitcoin Simply. Happy stacking.